Welcome to the Transparent FX Academy. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which is in a very strong uptrend. The market, in fact, has been creating a series of monthly higher highs and higher lows, and all this bullish trend is fueled by very strong institutional buying. And we will be speaking about the institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that we are seeing strong institutional buying, and let's also notice how the last move here was the creation of a new impulse, correction, and the market now seems to want to continue higher and essentially continue this monthly uptrend. So the creation of monthly higher highs and higher lows, and the creation of higher highs and higher lows is the definition of an uptrend itself. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear. What we can notice is that we have a market that so far has been creating higher lows and lower highs at the exact same time. So essentially the market seems to now be moving in this triangle formation, also called a wedge. And usually when you're seeing first an impulse, then the creation of a triangle formation in the form of a wedge, and then the next move would be the continuation to the upside. That is usually how this pattern plays out. And we can see a clear example of this pattern right here. We had a clear move to the upside, then higher lows and lower highs were created. So essentially we had the creation of a triangle formation or wedge pattern. And after that, as we have just explained, you would expect the market to create a breakout to the upside, which is in fact exactly what the market did here. So the pattern that the market is currently printing here from a weekly perspective is clearly a bullish pattern, and more bullish continuation could be expected, especially if institutions continue to buy. And we will be speaking about institutional buying in just a few moments when we move to the commitment of traders analysis. But for now, let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, the situation is quite clear. What we can notice is that we had first the creation of this W formation. And from here, I explained all the reasons for which I wanted to see this push lower and completion of the pattern at the neckline. And now we're starting to see a rejection away from this support. And I explained all the reasons for which I was expecting first this push lower and then a reaction to this level in my previous analysis. And now that is exactly what the market did. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. But before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. Now, if we're looking at the data for gold, what we can see is that in the long term, net positions have been massively increased. We went from 161.2k net positions with institutions having 76,000 shorts and only 238,000 longs, all the way up to now having 288,000 longs and 58,000 shorts. So already gold is bullish from an institutional perspective with way more longs than shorts. 288,000 longs compared to only 58,000 shorts. But what has also been going on is that longs got increased from 234k to 288k from an institutional perspective, and shorts got decreased on gold from 83k down to 58k. So institutions were already bullish and have even increased their longs and decreased their shorts with the last reports, creating that bullish trend that we have previously identified at the beginning of the video. And keep in mind that if we're looking at the data for gold, we are already looking at gold USD because all currencies on the spot and also commodities are already traded against the USD. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description so you never miss new updates. Now back to the analysis. So in a situation like this, we have the market which is creating a retest of this previous level of daily resistance from which this push to the downside was created, which is now turned support. Now, until the market will remain above this previous resistance turned support, more bullish price action could be expected away from this level, especially if institutions will continue to buy inside of this daily demanded support zone. And that could also trigger a strong impulse to the upside and breakout to the upside. So in a situation like this, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from the strong demand and support zone. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.